Hi, it's Mike from Apollo, and welcome back to The Growth Engine. And today we're super lucky to be talking with Giles Bourne. He is the co-founder of Scalare. He is the godfather of the Australian tech comp and many other things. Giles, welcome to the show.
Hey, thanks, Mike. This is super exciting. Glad to be on it.
Yes, and you are now officially a godfather. So
I know,
there you
I like
go.
that. I've been called the Godfather. That's great. I've never been called that before. Fantastic.
Now, I know everyone's going to be keen to hear from your point of view because you're sitting at Scalare Partners, big portfolio of venture capital investments. There's a lot of programs. People might be familiar with Tankstream Labs. They might be familiar with the Australian Tech Comp. We're going to get to that bit in a moment. But the thing is, you have an amazing founder's story. What's quite remarkable, Giles, is that it's not done very often these days, but you stayed at one company for 14 years and built a company that is now listed on the Australian Stock Exchange. It's called BluGlass, heavy R&D manufacturing, pretty high tech, pretty deep tech. And I'm really keen for you to share with us some of the lessons you had. We put that founder's hat back on. I'm really interested to know, how did you find that experience? And when you look at the success of the business now, do you recall some of those really important tipping points when you look back that have really made the company? So BluGlass, the story.
Oh, it's a long story. It goes back way beyond then. Well, I mean, I came to this country 30 years ago, and BluGlass was sort of back in 2006. So I got involved in BluGlass when it was a tiny little company. It was just sort of at its very beginnings, and I came along and very quickly found myself in the hot seat running the business and pulling it into shape. And at that stage, we were a company which should have been a venture capitally backed company. In 2006, there wasn't a lot of venture capital in this country. So you talk about listing, we actually listed it in 2006, a long time ago, because we need a lot of capital. It was a deep tech business, hardware business. We need a lot of money to actually grow the business. So we listed it when the rules were slightly different, pre-revenue, pre-product essentially, but a really good concept. It's some fantastic tech that came out of Macquarie University. And it had lots and lots of potential, but it's going to be very capital intensive. So we listed that business. And to be honest with you, to answer your question, Mike, what did I know about running a listed business? Absolutely nothing. And I had to learn the hard way. There's no sort of school that tells you how to run a listed business. And so you just have to go and find out. This is pre-ChatGPT, Claude, et cetera. Luckily, I had some fantastic mentors and people around me. And I sort of, running a business is one thing, running a listed business is another thing. So I got some awesome advice along the way. And there was a lot of trial and error in doing this. But because it's a research business, it wasn't driven by your typical metrics of a business, profitability, et cetera, EBITDA. It was driven about stories. So we had to tell a story to the market, had to get the market to believe in us, and then raise capital to deliver on that story, and then go back to the market again a couple of years later and do it all over again, and make sure that the investors were on the journey with us and they were sort of committed to that story. So it was pretty intense. We, along the course of the journey whilst I was there, we raised close to about 120 million. Some of it was from investors. Some of it came through grant funding at the time. The federal government was very sort of keen to promote these emerging tech stories, particularly sort of in the deep tech space. So we had lots of great government grants through the Clean Tech Grant, I think it was called at the time. But it's all cash matched. So every dollar the government gave you had to find a dollar in the public markets, which is quite attractive for investors. So we raised a ton of money along the way, did the research, delivered the milestones, had some customers, had some revenue, but knew we were in for the long haul.
So was the moment when the business decided to go public, do you look back at that decision as being one of those moments where you really set the business up? With the benefit of hindsight, of course, was that decision very pivotal on what was to come and raising a lot of money and the subsequent success? Was it hard, or was it like, were you forced into that situation? Give us a little bit of a peek into that moment.
To be honest, going public wasn't really a choice. The choice that the business had was really twofold, was either relocate to the US and basically raise the money there from the private market, or stay here and raise the money publicly. And we had this close association with Macquarie University, where the tech was, and the team both came out. So they were a major shareholder. So there was a need geographically to be located in Sydney, actually not too far from the university. So we really had no choice but to go down the public market and raise the money there and then use that as a platform to continue to get capital into the business. So very unusual for an early stage business to take this path. And today, you won't see that. The listing rules have changed dramatically, and it's a very different sort of path for these companies. And as we know, there's a ton more venture capital money out there for these sort of companies. So it just didn't really exist at that time. Pros and cons to that. Pros being, access to capital markets and a curious retail and institutional investor base. Cons being, as a public company, you've got all the governance and reporting requirements. You can't do anything in stealth mode. Everything you do has to be publicly disclosed. Literally everything you do. And if it goes wrong, you have to tell the market. If it goes right, you have to tell the market. So nothing goes in a linear fashion. You zigzag your way through. And when it goes wrong, it can go catastrophically wrong. I mean, I won't go into gory details, but we did have a near miss and near death, which was really difficult to go back to the market and say, look, the thing that we said we were going to do, unfortunately, we weren't able to do it for various reasons outside of our control. And then you get punished in your share price. But the investors stayed on the journey and they believed in us. They backed the team and we carried on sort of on the journey, slightly changed the focus of the business and continued to get it financially supported. And we brought in some customers along the way.
I'm interested about the Macquarie Uni. Obviously, a great educational franchise here in Sydney, Australia. So was that really helpful, like being embedded in that community, being related to that, geographically near that? I mean, I'm curious to know, did that help build and sort of support the business in the early days?
Yeah, look, absolutely. The team that we had came out of Macquarie University, and there was quite close associations and through various CRCs and other grants, we were working with teams there. But it wasn't just Macquarie, even though they're the major shareholder, and that's where the tech originated from. Ended up working very closely with the plasma division of ANU, Australian National University. So that connection to universities was critical. Developing some of the sort of key technology that sat behind the business relied not just on the team that we had, but that association with those academic institutions. Macquarie was vital. I mean, they did amazing work. This is a really interesting thing in the sense that there's a lot of good tech that comes out of university, and commercializing that tech is always a challenge. It really is. And, we were a really good case study of actually keeping this tech onshore and commercializing it here in Australia and keeping that association with the university. Often good tech like that disappears offshore, trying to find capital, etc. But we did it through this convoluted process and keep it onshore. And here we are in 2026. I'm no longer part of the business. I've exited the business, but it's still going strongly, the business. They've gone from being, when I was there, really creating technology around LEDs to now to high-powered laser devices. Really interesting. Got operations in California, in New Hampshire, and the development largely happens here in Sydney. So it's a really interesting business. It's still got lots and lots of potential.
20 years since that journey started for you. I'm very interested to know, were there any sort of timeless, classic mental models, frameworks, or ideas that you find yourself still using when you're working with portfolio companies? Were there any key ideas that you discovered worked very well for early stage companies that you find yourself still using, the evergreens, if you will?
Gosh, yeah, there's loads. Well, certainly on the capital, access to capital, how you tell the story, that to me, sort of how we told that story and then translating that to to the companies that we work with was critical, because we did it through trial and error, really. And we were dealing with a slightly different investor audience. But, we had, I can't remember what the exact number was, but call it 9,000 investors that I had to speak to on a regular basis through different forums. So you have to keep the story tight, on message, and all the rest of it. So that was a massive learning, going back and talking to companies in their portfolio. In fact, I was just talking to one today who's presenting at the Australian Technologies competition, which we'll come to in a minute. I was looking at what they were going to present. I said, it's too much information. You've got to keep it tight. You've got to assume people have a short attention span. You've got to be punchy. They've got to hear the story. You've got to understand it, believe in it. However technical the story is, they've got to walk away going, that's something I want to be part of.
I mean, it's perhaps a really sort of a dark art, if you will, of pitching and raising capital, that simplicity. The fact that 20 years ago you could list a company pre-revenue and tell a story is absolutely bonkers.
Yeah.
I mean, I think it would be absolutely classified as a mission impossible to do today.
Oh, yeah, the rules have changed as well. I mean, definitely. But, I'm not complaining because it served us really well. I mean, we accessed the capital markets. We were able to build this plant in Western Sydney. We were able to develop the technology, hire key people in, start building relationships with government agents who were customers of ours. It was amazing what we could do. And I don't think there's any other way we could have done it without actually taking the tech offshore. And we didn't want to do that. So amazing experience. And I mean, look, today I'm part of a public company, which is Scalare Partners. So lots of learnings there that we use for our listed vehicle, Scalare.
Yeah. So let's talk about the pivot in your career.
Yeah.
Again, 14 years at BluGlass, and then that was a very singular.
Yep.
It sounds like very immersive, like we need to get this thing to the moon. The listing obligations, compliance, government funding, high tech, high risk, deep tech, very singular focus. And then if you follow your career, then all of a sudden now you work across a huge portfolio of companies. Thousands of people have done the ATC. I would love to know for you personally, what was the motivation or the attraction to change things up so much?
I'll tell you exactly what it is. Very precisely. The old company, BluGlass, we were aware in 2013 of a competition called the Clean Tech competition. Nothing about it. And someone said, hey, you guys should enter. You're a clean tech company. You're doing LEDs. Reluctantly, I sort of entered this competition going, well, it's just another competition. But it wasn't, So we got involved and we got through round one. Then we got assigned a mentor. Then we went to this sort of 2-day masterclass, got some really expert advice. People like you, Mike, who were actually advising us, was giving us. It's superb. I mean, amazing. Then we entered the second round, put this detailed submission in. We got through that, and God knows how we somehow won the overall competition. It was an amazing experience, really amazing. And then the people who ran the competition at the time said, look, you've been through this, you know what it's like. Why don't you come to the other side and actually become a judge? I said, God, I'd love to. I absolutely love to. So I sat on the judging panel for, it must have been about 8 years. Or take. And in that 8 years, this is a very convoluted answer to your question, but in that 8 years, I saw tons and tons of tech companies, emerging tech companies, all with the same two problems. One is they needed access capital and they wanted help with their problem solving. They might be brilliant experts in a particular area, and in my case, semiconductor. They really don't have that expertise, say, in finance or go to market or whatever it might be, and they wanted people to lean in. I was going, all these companies are looking for the same thing. And I noticed in the Australian investor landscape, there weren't a lot of institutional style investors who were supporting these companies. There's a lot of people writing more and more checks. The venture capital market was improving, but actually leaning in and giving those companies support. Cut a long story short, there's a real opportunity there. I've had business experience. I've run a business, a deep tech business. I understand the market. I understand there's a real gap in the market and the funding. And I was talking to the two co-founders of Scalare, one being Nick Roberts, one being James Walker, both very entrepreneurial in their background, and they were seeing the same thing as me. And so between us, largely sort of driven by James with our input at the beginning, is going, we can put a business around this. We can actually use our expertise of running business, and we come from 3 different sectors, and actually provide capital and support for companies, going from that single focus of running BluGlass into this sort of portfolio approach of running an investment company. There was a natural transition. The enabler there was the Australian tech. Well, it went from clean tech to the Australian Technologies competition. That was really very clear path and there's an opportunity. And here we are today. And we now own the Australian Technologies competition and been running it for 4 years.
Well, you bring us, that's a beautiful segue to ATC. And full disclosure, you and I have both been working on this, but what a moment for our audience to hear from you about. You saw 240 plus applications. You've been immersed in judging, reviewing, mentoring, coaching, all of these, and went very close to announcing the winner. I really would love to get your sense. What's the pulse? What's the moment? What's going on in Australian startups right now? Because you are uniquely positioned to share with us what you're seeing, maybe what you're seeing change since the last ATC. So what are your thoughts?
Yeah, good point. Just let me say that, we've now run it for 4 years. So we've probably seen close to 1,000 companies coming through them. And so I'm a real variety. I've seen caliber, the quality of companies go up. There's no doubt about it. What I am seeing is the funding markets are tight at the moment. With all legislation changes, capital gains tax, etc., there are challenges in raising capital. So there's a bit of sort of wait and see. So people are beginning now, it seems to me, from what I'm seeing, is more thinking about bootstrapping their companies, really driving that revenue up, getting themselves much more attractive, rather than going for capital too early, really delaying that need for capital by trying to bootstrap the capital. So that's what I'm seeing more of. But it's fascinating. Just to add to that point, you see 240 companies entering. Amazing. Everyone's putting their world on the line. Literally betting their whole livelihoods on running these companies. It's extraordinary to see the amount of commitment that people have. Not everyone gets through, and not everyone reaches the finals. There's a ton of companies that come in, they don't make it through round one. What impresses me is those companies, they take the advice, they take on board the advice they get from people like you, they dust themselves off, and they reposition their company, or they tidy things up. They listen to the advice they've got along the way, and they come back again. And then you see them getting through round one and coming into round two, as very different companies. It's so good to see.
What a great result, because it can be hard to give tough feedback, but with a willing listener and learner, you can really, influence for the better an organization. Let's go back to this cash constraint. Everyone's seeing it, that wallets are tight, both with consumers, businesses, venture capital, a lot of instability and uncertainty, geopolitical disruption from AI. I mean, there's a lot going on.
Sure.
What do you think this has a result of doing in terms of the requirements for the capability of founders? Because it sounds like the traditional capital raise path is changing. There's a leaning towards bootstrapping. What do you think this puts front and center that maybe wasn't as important in the growth cycle, pre-COVID, pre-instability around the world? So what now is the kind of key capabilities founders must have to be in this new reality?
The biggest thing that you need to have is resilience. It really is absolute resilience. I mean, how many times do you have to hear no before you give up? The ones that succeed, the ones who go, well, I'm hearing no, but I'm going to keep going. I'm determined that I've got the right idea. I've got the right thing here. I'll listen to advice along the way, take it on board, but resilience and just keep persevering. I mean, I'm dealing with one company, I shall remain nameless. I think it's fair to disclose them on this show, but there's one company that I've been dealing with for a number of years, and they've tried to raise capital and they've been told no. Their tech was under threat from AI, but they very cleverly pivoted their company and they changed the customer focus. They go, look, we're making some revenue now. I'm going to cut my salary right back, said the CEO, and make this cash neutral and see if I can bootstrap it and then get this proven up with a different customer base, build it up, and get the support I need out there. And I've seen that happening more and more often now with businesses. It's coming back to this whole point of bootstrapping. Resilience is absolutely key. Just being able to go, I'm determined to get through this challenging geopolitical environment that we're in at the moment, economic environment. I can see light at the end of the tunnel. I'm just going to have to be very different about how I approach it. Another one I was talking to today was saying, well, I've got a great idea. I'm not wealthy. I have to feed my family. So I'm going to go and do some lecturing after hours. He's a PhD. He said, I'm going to do some lecturing. I'll get some money in, it'll buy me time, allow me to keep going with my business, make sure I can prove up the tech, get it absolutely right, get the customer base right. And at some point in time down the track, will be an attractive investment proposition. So I'm seeing a lot more of that, people being a bit more creative in how they approach the whole startup world.
And pivots are okay. I do see some reluctance in founders to make a pivot because they feel like, I've been proven wrong. But I think it's quite the opposite, right?
Yeah, 100%. Sometimes they go, well, look, I've got a good idea, but that market, that ship has sailed. I'm sorry to bring it back to my world, but I've been in that sort of position where we had a huge capital investment. And the area that we're going down, the ship itself, the business area, the customer and the technology being commoditized by the time we got there. And so we had to go, well, we've got this huge capital investment. How do we change it into another area? And it was a real soul searching moment, but we got there.
And I would say if a founder said, listen, we've probably had 3 or 4 major pivots to get to where we are, my inclination is like, good for you. You're a fast learner, right?
100%, Mike. I totally agree on that one. Absolutely, totally agree. I mean, like being able to go, not being so dogmatic, you won't listen to anyone, but listen to people and going, listen to your customers, listen to the market and going, this is not working, but I've got the underlying tech or whatever I've got is it's good, it's sound. I just have to be flexible and creative.
Yeah, it's this idea you can be actually very stubborn about your long-term vision, but extremely flexible on how you're getting to it, right?
Yeah, right. Absolutely. Spot on.
Okay. So we've got this huge batch running through ATC.
Yeah.
We've sort of got this now bootstrapping is top of mind, capability to be resilient and tough and just embrace the learning. It sort of very much calls upon sort of a growth mindset for the founder themselves. What I'd love to do now is talk about how the founder should be thinking about growth now that you've painted this picture. What did you see in this current cohort of ATC where people were being ingenious in thinking about growth and positioning, obtaining customers and revenue? Were there some things that you saw that really stuck out?
Yeah, look, the couple of companies that actually, and again, I won't mention, I don't think it's fair to mention names, a couple of companies where they're thinking about growth, thinking about customers, and actually come to the realization that they are subject matter experts, but not customer experts, and going, okay, the only way we can deal with this problem is bring in some experts to help us, actually lean on the community more, and actually get people to help us with that growth. May it be fractional work or even in sort of like bringing in a chief commercial officer, but recognizing what their limitations are as well as what they're capable of, and bringing in help where you can. And I'm working with a company now outside of the ATC who's doing exactly that. Two fantastically bright people from the academic world, they've got a fabulous product. I mean, absolutely fabulous product, but they go, we're struggling to connect with the customers. It's just not our strength, and so we need help. We need someone to really come in, and almost a point we go, we need a co-founder. We need someone who is on the same wavelength, plug into what we're doing and actually work with us directly as a owner of the business and help on that commercialization journey.
Yeah, I think what you're bringing up is this really important point of having the intimacy of how the customer experiences a pain or desires a gain that leads them to your product. And I think invariably spending time with customers is crucial. And I do see a reluctance in founders sometimes, particularly in the early days, to really engage customers. And I'm wondering what you see around founders that are really smart and resourceful about getting that contact with customers. One thing I was encouraging some founders to do this week is call up potential customers and just say, I'm looking for expert feedback on how to solve this problem.
Yeah, I mean, sorry to interrupt, but it can go the other way as well.
Yeah.
The founder actually, sorry, I'm interrupting you, but just to that point, a founder spends too much time with a customer and doesn't relinquish that and go, well, I actually need to bring someone in to do that.
So Giles, when do you know as founders, what do you observe when they've built something, the product itself, it's good, it's solid, but it's time to go to market? When do you know it's time for them to build up the team, get in the support in order to go to market in the right way? What do you identify? What are the characteristics you see that say it's time?
Yeah, again, I use examples because that's the best way of describing this. The company I was mentioning earlier, the two academics they've sold a certain amount of product to their community, and their community being a research community. But then they go, really, there's a next level up. This has got to be a commercial product, not a research product. It's got to be a commercial product. And then there's that tipping point, and you go, well, time is now. But then you've got cash constraints as well. You go, well, I can't really afford to hire someone, so I'm going to be a bit more creative on how I do this. So they lean on the likes of someone like you, Mike, and go, well, you've got the expertise. Can you come and help me at least formulate the strategy, help me build that sort of like how I'd build out my team and all the rest of it. It's a bit of a chicken and egg, isn't it? They need help, but they can't afford full-time help.
Well, it also sounds like what you're identifying as a moment when any business needs to go to a new customer cohort type, whether it's switching from B2B or B2C or just going to a different segment that looks and feels very different. That's a great signal to hang on. Maybe we're not we know one market very well, but we really don't know the other one nearly as well. We need to, get to know it, but maybe we need to find an extra pair of hands to get after that, some embodied experience, someone who knows the ins and outs of that market. Otherwise, I think it can be very dangerous that you get stuck taking your old approach and applying it to the new segment. And
couldn't agree with you more. I literally couldn't agree with you more on that one, because I see it all the time. For example, going to a research market is very different to going to a commercial. And the company, again, shall remain nameless, they're trying to go into the airline industry, and it's a very different from the research market. And it's someone who's got knowledge of that market or knowledge how to deal with that market. It's a completely different type of sale. It's a much longer, more strategic type of sale. And so realizing that you've got a tipping point where your company is, if you're going to make it, and you really have to think, right, I need different lens on this, a different perspective on it, and certainly a different strategy on it. In fact, I was talking another company today. I mean, I'm always talking to founders all the time, which is, I find fascinating, absolutely fascinating. I never cease to make, people putting everything on the line in these businesses. But the guy I was talking to today got a really good business, and he needs a sales support. He needs a commercial support. But he goes, I don't want to pay someone in equity. I want to pay them a meaningful salary, because I want someone there for the long term. Equity becomes a component at some point in time, because I want the best person. So I've got to pay that person properly, to get the right person who's sticky, who's going to be in the business and be in there for the long haul. But I want to get the right expert. And what I'm up against, if I'm going to bring that person in, he could go and get he or she could get a corporate job and get paid,
yes,
kind of money over here. Or I can be in my startup world. It's high risk, and I'm, are we going to be around in a year or two? I hope so. That's the plan. Yeah. So it's a really difficult one, really, really difficult. This guy was going, I'd need to pay them a proper corporate rate or proper salary, at least, to get them absolutely embedded in the business and be, and equally incentivize them with an ESOP along the way as well.
Well, let's try and use this just as an example and see if we can fix this for some founders, because I think I've seen this as well with the founders and companies that I help. And to put a little point to it, I would say if they are talking to candidates, any startup is talking to a candidate who's saying, I'm looking at a job at a Fortune 500 or with your 5-person startup.
Yeah.
That is already a huge flag, because if they said to you, I'm looking at 2 early stage startups, this is a big tell that they're ready to do something like that. If you are caught as a small early stage company trying to provide a total comp package today to pay the mortgage for that person, they could be going to Fortune, you're never going to be able to compete.
No, you're right to that point. So the person you're attracting has got to have that entrepreneurial mindset, absolutely. So they've got to go, look, I could be in a comfortable world over here in the big corporate. That's not for me. I reckon my world is this entrepreneurial startup environment and the rest of it. So they've got to have that mindset for sure. Absolutely.
And some risk tolerance. And I would say the other thing that I'm keen to get your thoughts on is rolling the sleeves up, because you're definitely going to be doing that in a startup, aren't you?
Oh, 100%. You'll be doing multiple jobs. I mean, I can tell you from a Scalare point of view, when we started Scalare 6 years ago, we were doing all the jobs. We had to do everything, just the way it is. And when you hire someone in, and our first employee, who happens to be our finance person, she was literally doing multiple jobs, sales, finance, you name it. But you take that risk, that opportunity, but you embrace it with gusto, basically.
But let's be honest, yourself and James and Nick, you're all still very hands-on. I mean, it's a publicly listed company, but you're all very hands-on.
Oh, it have to be. I mean, that's it. We're a small team. There's no admin support. You do everything yourself. And we're really lucky. I mean, in Scalare, we've got, I think we're now 45 plus people in the business, but it's a very thin team where, everyone's doing multiple jobs, but that's just the way it works. I still classify us as a startup. We really are. In many ways, we're growing rapidly, but you just have to wear multiple hats. That's the nature of the game. But my God, it's fun.
Well, not only is it fun, but I think it puts you in a posture where you truly can relate to the portfolio companies and new partners, because you're eating your own dog food. You are a startup just like them. Now, talking about being a startup and pitches and pulling that together, there's a linkage here with raising money, because when you're at an event, in a competition, you're presenting your business in very constrained perspective. It's often time constrained. You've only got a few slides, a few moments to get the value across. Now, there's a whole art to telling the story, and you mentioned that was really pivotal for BluGlass. Now, what I would love to do is tie that together a little bit by saying and asking you about what is the best practice today for early stage companies to communicate their traction, the evidence that their business is working, particularly if they haven't received a lot of venture capital. And secondly, they're bootstrapping, so they're capital constrained as well. What are the best practices to say, hey, we're doing well? How do you share that story if you're not able to lean upon particularly a high hockey stick revenue growth, which was something that was very much prevalent for the last years. But now we're bootstrapping, capital constrained, uncertainty. There's a different nature to revenue growth. So how do you communicate traction? What are you seeing from this current batch in ATC? How are they doing a good job of saying, here's the traction, here's the momentum of the business?
Yeah, it's a very good point, Mike. I mean, look, I keep coming back to the individual. When you're an investor, you're investing, I mean, obviously it's got to be a great idea, but you're investing in the individual. You've got to go, has this guy or this girl guy got the drive to bring this business forward? And it's really difficult because, if you're in the A to C cohort, we're going to have pitching in a few weeks' time. We're going to have 30 companies all pitching together. And, the judges are going to sit there and listen to 30 different pitches. And how do you stand out and convince people that you've got something which is really worth investing in? So it's got to be the individual itself, the person who's running that company. The investor's got to believe in them. They've got the capability to drive it forward, navigate through these choppy waters that we're going through at the moment, geopolitically, economic. They've got it. And you know full well when you see those hockey stick curves, you go, bullshit. Sorry, bullshit. So I'm looking for that person who's just got that drive, that resilience we talked about earlier on, and then bringing a story that's punchy, it stands out above everyone else. I'm not sure if you saw it, and I hate to sort of publicize on your show, but at the Australian Technology Company Go Competition Masterclass, we had this guy called Mike Shervington who came along, who doesn't come from the startup world. He comes from a military background, but he's taught resilience in the military, amongst other things. And he had a very, very different approach to how to tell your story and stand out and be different. And he used it really from how he taught resilience in the army. And it was extraordinary. But what he did, and which I was really impressed by, his methodology was really about practice, 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 practice. Know who your audience are, research your audience, know them, talk to them personally, be able to communicate with them personally, actually know who you are that you're talking to, have some personal contact with them. And they're going to lean in. Eye contact, really, really drill into that individual, where on the edge of the seats, they cannot but follow your story. So quite a long, convoluted answer.
No, there's a lot there. Let's unpack it a bit. So what I'm hearing is the delivery of the message should come supernatural.
From the heart.
No cue cards. It is your compelling vision and story.
Correct.
It just pours from you.
Yeah. I mean, obviously it's got to have the economics have to make sense, of course.
We'll get there. We'll get to the economics. But I think what I've seen together with you in this current batch is that founders who are deeply immersed in the execution and the vision of the product, those that have the command of that are able just to sit down and tell the story at any level of altitude and connect with the audience. So they must know that subject matter. So I think like a big lesson that we've seen is to suggest to a founder that they should be able to, at any point, get on a stage and tell the story well. And if they sense an unease when given that challenge, that's just a signal that they need to go and learn the story better. Would you agree?
Absolutely spot on. And again, I was telling someone today, when you're pitching, you got 5 minutes to pitch, practice, 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 practice. Do it again and again and again. Just know your story. Wherever possible, don't read off a cue card. Just flow naturally from the heart. Be able to talk fluently about.
Yes. So that's like a great thing. Until you can just actively recall and adjust the story, maybe throw in a few examples that are perhaps more relevant to the audience that you're with. Until you're there, practice is a good one. What's some best practice around sharing data about the success of the company? Are you seeing a pattern on okay, so our monthly recurring revenue is here, or are people talking about pipelines? Are they talking about number of beta testers? What are some really practical, evidential things that really get your attention?
Definitely want to see high level numbers about growth, where you were, where you're going, what you're doing, but not you know, I don't want to see too far out because after a year or two projection, you go, that's nonsense. Just
Yes.
give me where you've come from, where you're going. So headline numbers about that revenue growth and the ARR growth, for example, is really important. And customers, what sort of quality of customers you're onboarding, who you're onboarding, how many customers you engage with. I think there's a sort of a critical number of like 10 is the sort of number. You've got a couple of friends and families that try it out as customers. This is very much generalizing, Mike.
Yeah.
When you get to that sort of critical mass, where you've got multiple customers onboarding and showing that trajectory of the customers is really important. And then obviously capital, managing your money is really, really important. Capital constrained markets is making sure you've got enough resources to deliver on what you say you're going to deliver and what you're going to do to manage, assuming you're not going to get any money in, how are you going to manage that? So those sort of metrics are really important to me when I'm looking at a business.
And what do you tend to see working well from a founder setup? Do you love to see two founders? Do you have a thing? Some people say, I want to see that they've done something together before. So the classic thing, they were at college together, or just give us a lens on the founder composition and the chemistry between the founders and so forth.
Look, not at all is the answer. I mean, look, if they've done something before, that's great.
Yeah.
Some have done stuff before, they failed, they succeeded. That's always good. They've been seen and done it before, but that's not always what you're looking for. It could be an individual, could be people with mates before. I'd like to, always like to see a balance in that founders. They balance each other off. For example, if it's two founders, they're not just complementing each other. They've got very different skills they're bringing to the business. So one might be commercial, one might be technical, but they work well together. Symbiotic relationship. Not necessarily they were college buddies or anything else like that. A lot of the founders we see are just individuals, one person. It's a whole mix. So I don't really have any rule of thumb when looking at a business. Coming back to what I sort of mentioned earlier on, it's just the quality, the passion, the drive, the resilience. Whether it's the individual or a couple of them or three of them, it doesn't matter. And again, I'm perhaps, looking at Scalare, my own business, there's three of us who founded it. And we had three very different people, but with a common goal. And we come from very different, we're all involved in the tech industry, but we come from three very different backgrounds in terms of our business world. But it works really well because we're not, one's an expert here, one's an expert here, one's an expert. And we bounce off each other really, really well.
What advice do you give to founders when you have a composition like that? Naturally, if three different people, it can be sometimes hard to get on the same page. Do you have any advice to founders, like if there's a left brain and a right brain person, any techniques or practices that can bring people together?
Yeah, for us, it's like making sure you listen to the others, listen to their experts. I want to learn from them. And I'm hoping that they can learn from me, but, just listen and don't, in our business, we've made it a very sort of clear partnership. We're three equals in that sense, and we hear each other out. And I think a really important part of how we work and how the dynamics works together, it's not just in a formal environment. Right away from the get-go, we always spent time outside of the business together in an informal setting, which often has, iron out a lot of the challenges in that type of environment rather than just sitting in a formal environment. We would regularly go and have work drinks on, or we go away for a night or two and just spend time together, which is really, really good. Just to bounce ideas more than anything else and work out the dynamic of working together and listen to each other.
Yeah, it's really interesting. You mentioned listening. I think I really pick up on that. I think great long-term founding partnerships have a mutual respect, time and space to listen and understand each other.
Yep.
Might not always agree, but I think it's the process. If you feel like you've been heard.
Yes. Totally, absolutely. And if your voice is not being heard, then there's a problem, type thing.
Oh, those are the seeds of bad times, right?
Yeah, I was dealing with another company, and again, as mentioned, who had 5 founders, and they were all the same. They all came from a sort of sales type background, and they all wanted to be the leader. And it's a dynamic just doesn't work that well. It just doesn't work, So
listening, spending time together, and pulling
respect.
Things. Yeah. And I think that's the key thing. If you don't rush to judgment, right, and say, well, let's hear each other out, let's get on the same page. That for me is what I witnessed in enduring partnerships in business is really important. And it is crazy how many founder partnerships do fall apart because they haven't been listening to each other, right?
Yeah. In fact, I keep on talking about stories, but I was talking to some people today about a friend of mine who started a business with a friend, and they were very different and they respected each other at the beginning. And they started this business and it was a really good business, good tech business, but they liked each other too much. And they didn't think about the consequences, what happens when circumstances change in 2, 5, 10 years time. Anyway, long story short, the business went in a direction that one of them didn't agree with, and then the partnership started unraveling. But they hadn't put in the safeguards and the mechanisms right at the very beginning, the simple stuff, that protected them. And so it ended up in an absolute disaster, really.
And what a shame. Like, that was a friendship that fell apart because nobody thought about what happens if it doesn't work.
Yeah. And then they, rather than sort of like talking about listening to each other and working together, they ended up becoming, sworn enemies.
Yeah,
and it's
estranged.
awful.
Yeah.
And that ruins the business and it falls apart, and there's always a loser in that situation.
Well, the good news is that because you are now steering and guiding the Australian technology competition, we're going to have lots of founders giving lots of love, lots of listening. Just to kind of wrap up this story that we've had together today, what are your hopes as we do many more ATCs? What are your hopes for the effect, the impact that you can have on founders, not only with ATC, but also with Scalare Partners, because you're uniquely positioned to really influence early stage companies in Australia. I'm very keen to understand what's the long-term impact you're hoping to have now that we know we've got founders who are working in a bootstrapped, uncertain environment. They need to be resilient. They need to find out new ways of coming together. They need to listen to each other. They've got a lot of work to do. What I'm really keen to hear about is what's the work for you to do? What's the impact you're looking to have over the next 3 or 4 years with ATC and Scalare? And
look, this is pretty high level, Bob, but we've heard this many, many times before. But, in Australia, we've got some amazing founders. We really do. And I've been here for 30 years now. I've spent more of my time here than I have in the UK and elsewhere. And I just see incredible depth of talent and expertise and skills here. And what I don't see is, this being the sort of fourth pillar of the economy. And we heard this in a number of conferences this year, about the lack of sort of investment just generally into the tech industry. We've got this enormous superannuation industry. Very little of it is getting involved in technology. And I'd like to think that we at Scalare and through the ATC are building up more and more support for early stage founders and tech companies in Australia and building a real sort of proper pillar to the economy here. I mean, it's really bold, I know, but, there's a ton of really good skills here. We've got some amazing talent coming out of universities, across the country, real talent, with some really great ideas. Just we'd love to see more of it being supported, homegrown. I know we've got a relatively small market here in terms of population, but there's no reason why we can't be supporting these tech companies early. I mean, getting in early, supporting them, providing them the skill, which we do at, Scalare and through the ATC, but providing them support they need to help them grow onshore, bringing in local talent. I was involved in this moonshot thing last year, which was really interesting with government, investors, industry, and all the rest of it. And we lack, to a certain extent, hubbing of technology companies. We always talk about Silicon Valley. There was the hubbing of tech companies down Silicon, and then in Austin, Texas, and various other places. We still that hubbing where there's that sort of hub of everyone coming together, investors, government, community. I'd like to see that we at least can sort of drive a little bit more of that early stage support with tech companies, keeping them onshore, keeping them supported, providing them the capital they need to help them grow, the support they need to help them grow, and then develop to global companies. That's a really big, bold vision, but that's what Scalare is about, and that's certainly what the Australian technology competition is about as well.
So the fourth pillar, I love it. And I think putting our best foot forward starts with helping founders. And I think you're doing that in buckets, Giles. I am sure there are founders watching and listening to this wondering how they can find you out there on the interwebs. What's the best place for them to search you up?
I think probably the best starting point for anyone connecting with us is the Founders Union. The Founders Union is a business that we built, which is really sort of like the portal for the founders to come together with a ton of resources and support. It's got a lot of support from corporates there, leaning in, providing support. And that's a obvious starting point for anyone. If you come to Scalare Partners as a website, or you come to the Founders Union will get you into the network, into the support, because it's not just about investment. It's all about, the ATC Tech Ready Women. It's all about, Planet Startup, all these support we provide. So if someone comes to us and they go, we were looking for capital, it might not be that we can invest straight away, but there's a ton of other things we can do to help them. Working with people like you, for instance, where they build up their customer base, their profile, their go-to-market, and all the rest of it, making them ready for investment for us, a little bit down the track. So the Founders Union is absolutely the best starting point.
Fantastic. I'll put a link in the description for the Founders Union. Giles, it's been so wonderful to hear not only your story, but really get a sense of where startups are at right now in Australia, and to get a little bit fired up and go build this fourth pillar together. It's been wonderful having you on the show. I thank you very, very much.
No, thank you, Mark. I've really enjoyed this. It's been a great conversation. I've loved working with you, and I've loved this session we've had. It's been fantastic. It's like a therapy session, isn't it?
Done. Let's go build that fourth pillar. All right, Giles. Thank you to you. And thank you to you, all our viewers, listeners, and members. We'll catch you next time on The Growth Engine.